that really you don't have to look at the money perspective alone, but there are many ways of appraising a human being. Trust you me, for me, I would rather the monetary perspective, money. So these are the future cash flows. And then somebody comes and tells you to get the present value or the value of the farm. So how will we do this? The very first thing that I will do, ladies and gentlemen, is to appreciate the infinity value. The first thing that I will do here is to come and appreciate the infinity value. So how do I get the infinity value? To get the infinity value, this really is the very simplest thing ever. To get the infinity value, this is very popular in your exam. To get the infinity value, we normally use the provincial officer formula. To get the infinity value, we normally use the infinity value, ladies and gentlemen, you normally use the provincial officer formula. Is there anybody who is able to remember this provincial officer formula? Let me see. Is there anybody who is able to remember the provincial officer formula? I like what Gilbert is telling me. I'm telling you, Gilbert, if today you are here with me, physically, I would have given you 2,000 bob. Straight away, Gilbert. Straight away, Gilbert. I even have it here. Straight away, 2,000 bob. I know somebody will tell me to send him the money in M-Pesa. I knew. I knew. I knew that. I knew that. So, ladies and gentlemen, what Gilbert has just told me is that for us to be able to get PO in financial management, we normally take DO into 1 plus growth. The district officer has to grow. The district officer has to grow. The DO has to grow to become a provincial officer. All over Kenya minus government. All over Kenya minus government. For sure. In Kenya here, do you believe, ladies and gentlemen, that we really have a serious government? Do we have a serious government? Bila serikali, I like what Lucy is telling me. Do we have a government? We have the deputy president. The president, they can't see eye to eye. The opposition has joined government. So all over Kenya minus government. Now listen and listen to me. For the students who are joining us for the very first time, this PO stands for current market price. Current market price, which is the same as value of a share, value of an organization, value of a share. This DO stands for what? It stands for the current dividend per share. The current dividend per share. The current dividend per share. And then we have a G. This G stands for what? It stands for the growth rate. This G stands for the growth rate. And then we have KE, which stands for cost of equity. This stands for cost of equity, like that. Listen, if you look at the question that we were doing in our last class, it had a provision of infinity cash flows. Anytime in finance they talk about infinity cash flows, I must always think about the provincial officer. I must always think about this provincial officer. I would want to repeat this one more time. Ladies and gentlemen, this is quite confusing to students. Whenever they tell you that cash flows are growing at an infinite rate, or they tell you that cash flows are perpetual. Perpetual is another term they use, perpetuity, perpetual. Always think about the provincial officer. Now listen and listen to me very well, ladies and gentlemen. This is where we are. This is where we are. I would want to repeat this provincial officer formula again. We are saying that the provincial officer formula for infinity cash flow equals district officer into 1 plus growth rate all over KE minus what here? Minus growth rate. So the most current dividend is which one here? The most current dividend, if you delete the 5 there, the most current, what we call the most current cash flow, is this 18, which is preceding this infinity. The one coming immediately before the infinity is this 18. So I'll talk of 18 into 1 plus the growth rate, which is 0.1 all over. The cost of equity was given down here. The cost of equity was given as 0.2 minus the growth rate of 0.1 minus the growth rate of 0.1. So numerator first. So take 18 times 1.1. 18 times 1.1 will give us what figure? You know, body mass is quite a big challenge to many students of advanced financial management. And the way to handle body mass, you should just be procedural. First of all, enumerate. First of all, ladies and gentlemen, ascertain the numerator value. So we have Winnie 198. Winnie is telling me that, you know what, Mwalimu Winnie Julu is telling me that the numerator is 198. So I should take 198 divided by who? I should take 198 divided by who? 198 divided by who? 198 divided by who? 198 divided by who? So the numerator is 198. Is it 198 or 19.8? 19.8 divided by 0.1, the denominator, which will give me a final figure of what? 198. The final figure is 198. The final figure is 198. So have we been able to get this 198 figure, ladies and gentlemen, all of us? Have we been able to get that 198, all of us? Yes, thank you very much. So this 198 is what we shall come and put here. So Mali Menduko infinity cash flow, we've been able to get this figure as 198. This is the figure that we get here. The infinity cash flow is 198. From there, ladies and gentlemen, please look at your cash flows. These cash flows, how will you classify these cash flows? Are they PVF or PVF cash flows? Should I use PVF or PVF to discount them? Which one should I use? They are telling me these guys are very bright. They're telling me, Mwalimu, use PVF. Why? Because these are not annuities. They are not annuities. These are not annuities. These are not annuities, ladies and gentlemen. PVF stands for annuities. Annuities for the new students are those repetitive figures. So like today we pay 10, tomorrow we are paying 10, the other day 10, 10, 10, 10, 10, 10, etc. Then that becomes PVF. But you see here, these are fluctuating. So fluctuating, we are calling them PVF. PVF, what is the cost of capital being given there? It is 20%. The cost of capital being given there is 20%. Thank you very much, Gilbert. They're irregular. So, ladies and gentlemen, is there somebody who is able to see the lump sum PVF tables, discounting tables? Is there somebody who has got that table? We said in our last class that all of us were to print out the tables. The tables, all of us were to print out actually all the past papers. So do we have those tables? It's only Winnie who is confirming. What about the other students? We have David, yes. So could you kindly go to 20%? 20% column on those tables. Don't go for the table written annuity. I want the table written there lump sum, fluctuating lump sum. And then you look for 20%. So 20% year 1, 20% year 2, 20% year 3. So 20% year 1, what figure are we getting somebody here? 0.83. I'm feeling that I'm really losing out some students. Sorry, let me read one comment here. There's a comment I would want to read here. Me, I even have the one direct from Castleb. Great, great. So Joseph, I can see you have put up your hand. Joseph, is it possible I unmute you, you talk to us? Right, so 0.8333. Thank you so much. How about 20% year 2? 20% year 2. I know what Joseph may be wanting. If you've got a good Samaritan, is it possible you share that table with us on WhatsApp? Is it possible you share that table with us on WhatsApp? Lucy Akonaya Kasnem, direct. So 20% year 2, 20% year 2. What are we getting there? Somebody 20% year 2. 20% year 2. Wanasema ni 0.6944. 0.6944. 20% year 3. 20% year 3. 5787. 5787. Thank you very much. 20% year 4. I will do that, Joseph. I'll do that in a moment. So 20% year 4, 20% year 4, 0.48, 0.48, 48, 23. So what do you think of 20% infinity now? 20% for this infinity, 20% for this infinity, we should always repeat this immediate predecessor. The immediate predecessor is what we bring here. You drop down. Thank you so much. Drop down. You drop down like that. Thank you so much. Thank you so much. So come and create a column here. Or rather, there is a student, ladies and gentlemen, who asked a very good question. Mwalimu, what if I don't have the table? What if I don't have this table? How will I be able to calculate PVIF? How will I be able to calculate PVIF? So to calculate PVIF, ladies and gentlemen, present value interest factor, we normally use this formula. 1 plus R raised to negative what here? Negative N. 1 plus R raised to negative N. Very important formula. So if, for example, I'm using this formula, then PVIF, we are saying it's 1 plus R raised to negative N. What is our R? Our R is the rate of return. Our R is the cost of capital. The cost of capital. So like now here, I will talk of 1 plus R. The R is the cost of equity, which is 0.2. And then I'll raise this to negative what? Negative 1 because of the time period, negative 1. So if you do that in your calculator, if you say 1.2 raised to negative 1, what figure are you getting, somebody? What figure are you getting, somebody? What figure are you getting, somebody? What figure are we getting there, somebody? It will be exactly this. Thank you so much, David. David 𝗥𝗖𝗄𝗏. Thank you so much. David 𝗥𝗖𝗄𝗏. Thank you so much. So when you go to the second figure, this will be 1 plus 0.2 raised to negative 2. You'll be able to get exactly this. Confirm again. Confirm again. Confirm again. I'm so sure that you will be able to get that 0.6944 like that. So the student who was asking, how do we use, ladies and gentlemen, a formula to get this? I want to believe I've answered your question, haven't I? Haven't I? Thank you very much, Lucy. The student who was asking about the formula, I believe I've answered your question. Thank you very much. There's another student who is asking about how do we get this 198? You know, as a good teacher, you should never get tired answering questions. As a good teacher, never, ever, ever, ever get tired answering questions of students. Thank you so much. So how do we get this infinity cash flow? We call it an infinity cash flow. We have our formula, which is the most current dividend. The most current dividend. So we have here the most current dividend. It's 1 plus growth rate. into 1 plus growth rate all over Kenya minus government. All over Kenya minus government. All over Kenya minus government. So our most current, if you count this, the most current is 18. So 18 into 1 plus the growth rate. So the growth rate was given here, it was 10%. All over Kenya, the cost of equity, the cost of equity is 20%. 20% is 0.2 minus 0.1. So the student who is asking how I got this 198, if you're keen enough, first of all, get the numerator. The numerator, I'm being told is 19.8. The numerator here, I'm being told is 19.8. And then the denominator is 0.1. We divide the two, then you shall be able to get the 198. So the student who was asking this question, I believe right now, you're able to confirm these figures. And please mention there something that will be able to show us that we are together. Great, thank you so much. Now from there, now you need to come and give us what we call the discounted cash flows. The DCFs, the discounted cash flows, you must write that name in full at first. The discounted cash flows, you must write the name in full at first. So how do we get the discounted cash flows? We are taking this 10 times this, which someone has been able to give me 8.333. How about 13 times this? 13 times the second one. Somebody is giving me 9.27. Thank you so much. So 9.27, thank you so much. And then we have 15 times this. 15 times this, the third one. The third one is 8.605. 8.605. And then we have 18 times this. 18 times 0.48. We have 8.68. So we have 8.68. And then we have the last one, which now will be 198 times 0.4823. Can somebody give me the last one? The last figure. We are getting 95.595. 95.95. 95 point, I'm waiting to get that figure again. 95.5 or something. Don't know. 95.5, I don't know. You guys have got the correct figures. So mine, I'm only giving the figures that I'm seeing from some of my students. They're quite close. So please come and give me the total. Please come and give me the total here. So the total, according to Sharon Kendi. Rael, the 20% was given, it came from my head. 20% came from my head. 20% came from my head. So the discounted cash flows, you must add up all of them. Please add them up. Add them up, add them up, add them up. What are we able to get? Somebody here, we are getting here. Thank you very much, Rael. So if you add all of them, what figure are we getting? 130.46, 130.46, 130.46. Thank you, and thank you so much. So then these 130.46 are having been discounted from the future to present value, this automatically will be the value of the firm. Value of the firm. Value of the firm is 130.46, like that. Value of the firm. There's somebody who is disputing something. There is somebody who is disputing something. There is somebody here who is telling us, ladies and gentlemen, that the discounted cash flow for year number 2 is 9.02. There's somebody who is 9.02, not 9.27. Is that okay? Is that okay? Great. Confirmed. 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 Thank you so much. At least you guys now have an idea. Now, ladies and gentlemen, let's get back to the front of our books. Let's get back to the front of our books. There is a question that we are doing. Are you able to remember that question? There is a question that we are doing ourselves. Are you able to remember that question? Are you able to remember that question? It was from some past paper. It was from some past paper. It was from some past paper. Are they able to remember that past paper? April 2022, I doubt whether that's the one we're doing in our last class. Jabir, that is not the one that we're doing in our last class. Trust you me. It isn't the one that we're doing from our last class. May 2016, yes. May 2016, question number. May 2016, question number 4B. Thank you so much. May 2016, question number 4B. So all of us, can we retrieve that question? All of us, can we retrieve that question? All of us, can we retrieve that question? All of us? All of us, can we retrieve that question? Can somebody send that question in our book, in our WhatsApp group? Can somebody send that question in our WhatsApp group? Someone to share, please. But now remember, Winnie Julu, what we said is that everybody must print the AFM questions. Everybody must print the AFM questions. Do exactly what I've done. Just have your own set of questions. Have your own set of questions. Have your own set of questions. You'll never go wrong. Imagine I can't trace mine even after. Is there somebody who can share with us on Zoom? Is there somebody who can share with us on Zoom this question? Is there somebody who can share on Zoom the question, that question, woye? Share on the wall already. Okay, thank you very much, Steve. Share on the wall already. Shared on the wall already. Shared on the wall already. Yes, this lady called Candy Frida. Great. Thank you so much. Thank you so much. So are you able to see that question, all of us? Are we able to see that question, all of us? Where a company called Huge Limited intends to take over Tiny Limited. Ryle, just go to the WhatsApp. Go to WhatsApp, Ryle. You'll be able to see that question right away, Ryle. Go to WhatsApp. You'll be able to see that question right away. So are we able to see that question, all of us? No. Are we able to see that question, all of us? It's very popular in our exams. It keeps coming every semester. Every semester it comes. Every semester it comes. Every semester it comes. Every semester it comes. Great. So we're told here Huge Limited intends to take over Tiny Limited, another company in the same industry. Tiny Limited is expecting to post earnings of 86 million next year. If Huge Limited acquires Tiny Limited, the expected results of Tiny Limited for the next 3 years will be as follows. Abracadabra, I can see sales. So what I'll do, abracadabra, thank you very much, Francis. Abracadabra, I have year 1, year 2, year 3. Are you able to see the sales? I would want my figures to be captured in millions. So sales for year 1 is 200. Sales for year 2 is 280. Sales for year 3 is 320. 320. So remember, ladies and gentlemen, for me to be able to use discounted cash flows, whenever you're given sales, whenever you're given expenses, first of all, we must get profits. So if I'm able to see the sales here, down there, I can see the expenses. So you less them for purpose of getting the profit. So come and less the expenses. And the first one is what they're calling the cash cost. So the cash cost, year 1 over year, what figure are we able to see for the cash cost for us to deduct in year number 1? What cash cost are you able to see there? Somebody talk to me tonight. Who is this who doesn't want to talk to me tonight? Cash cost for year number 1. What do we have there? Cash cost for year number 1. I just want to gauge whether you guys are having the question. Cash cost. Thank you so much. So the cash cost year 1 is 120. The cash cost year 2 is 160. The cash cost year 3 is 180. Do we have other expenses? Yes. I have their capital allowance. Remember, capital allowance is not a term that we use in AFM. Whenever you see capital allowance, always replace it with the depreciation. Whenever you see capital allowance, always replace it with depreciation. So if I were you, I would have written in my mother tongue, that capital allowance is the same as depreciation. But now, unfortunately, most of the students here don't know their mother tongue. You'll be surprised. I'm not Kikuyu, but I happen to be knowing deeper Kikuyu than most of the Kikuyu students that I have here. For instance, if I'm greeting an old lady who is closer to my mom's age or even bigger than my mom, tamwambia wakia maito, bia wakiawa, right? Lugha ya heshima ya Nyeri, uko ndani kabisa, ndani kabisa. Hiyo mimi najua nyinyi hamjui, najua hapo wengi hamjui, right? Correct. Correct. So anytime they talk about capital allowance, always know that capital allowance is the same as what? Yeah, depreciation. Depreciation, I'll always replace it. So depreciation for these, what do we have there? Depreciation, I can see 20, 30, 40. Thank you. 20, 30, 20, 30, 40. 20, 30, 40 years. Do we have other expenses? Yes, we have interest. So interest, unakuja unatuonyesha interest. So interest, what do we have there? Interest, I can see 10, 10, 10. I subtract them like you. Interest is 10, 10, 10, 10. Yeah. Cash to replace assets and finance growth. You have to let hivyo hapa. Cash to replace assets and finance growth. Atuleti hapa kwanza. You know, achana nayo. Unakuja una subtract. So could you kindly give me these figures now here? These are my profits. Kikuyu national language. Hapana, mimi najua languages mingi sana. Kama for example ni Kiborana, najua ukisema akam dancer. Nilikaa Meru sana nikajua otemanto, negodongi, right? We shall overcome. So please give me these figures. Give me these figures, Jabir. Great. Give me these figures here. Give me these figures. The first figure, what do we have? The first figure, we have 50, 180, 90. 50, 180, 190. Is it 80? 50, 80, 90. Thank you so much. So you see, ideally, this should be profit before tax. Why profit before tax? Because already I've subtracted depreciation. It would have been profit before depreciation and tax. But you see, already I've subtracted depreciation. And that's why I would want you to cram from the word go. In finance, we don't like this language called capital allowance. In finance, we love depreciation. So this is profit before tax. Let me ask you a question. Has this examiner given me tax in this question? Are you able to see tax is 30%? Is there a place they have given me tax? Have they given me tax? Have they given me tax for sure? Have they given me tax for sure? Have they given me tax for sure? Tax. Are you able to see tax of 30%? Yes, there is tax of 30%. There is tax of 30%. Thank you so much. So come under less tax here. Less tax here. So tax of 30%. So tax of 30%, could you kindly calculate 30% of these figures very fast? Give me the figures. The tax of 30%. I have the figures, but I would really 30, 15. So I'm being told this is 30. No, 15. Thank you so much. How about 30% of 80? 30% of 80 is 24. How about 30% of 90? 30% of 90 can't be 57. That's too high. 27. Maybe you confused them. 0.5 instead of 2. So please come and subtract for you to be able to give us profit after taxation. Profit after taxation. Profit after taxation. We are subtracting now 50 minus 15. That gives us 35. That gives us 35. Thank you so much. How about 80 minus 24? 80 minus 24. 56. This is 56. And then we have 90 minus 27. 63. Thank you and thank you so much. Thank you and thank you so much. So we have now profit after taxation. But remember that I'm dealing with finance students. And finance students, for that matter, were being taught by Dr. Aura. They should be bright. So when I get profit after tax, what do you think will be the next thing to be done in finance? We add back depreciation. Thank you so much. We add back depreciation. So come here and add back depreciation. Come here and add back depreciation, the figures that we have. And that is why I told you from the word go that we don't like making use of the terminology capital allowance. When you see capital allowance, run to depreciation. So add back depreciation, which is 20, 30, and then we have 40. So you add back. So you're adding back. When you're adding back, so you're talking of 30 plus 20. That gives us 50 what here? 55. 56 plus 30, which gives us what here? Somebody 18. 6. 63 plus 40, that gives us 103. And then I can see a very bright student called was it Susan, asking us, why do we add depreciation? Remember, in finance, we don't discount profits. In finance, we normally discount cash flows. We normally work with cash flows. What in this case here connects between profits and cash flows? What comes in between profit here and cash flows? It is the non-monetary expenses. So cash flow, profit. In between we have what here? Depreciation, non-monetary. Susan Nakram. Ukishapata profit, to get cash flow, Susan, Susan is a very good name. Ukishapata profit after tax, Susan, unasema add back what here? Add back depreciation like that to get cash flow. So whatever we'll be getting here will be called cash flow. Will be called cash flow like that. Now, ladies and gentlemen, having gotten cash flows, are these the values that we shall use for purposes of valuing the farm? Are these the cash flows that we shall be using for purposes of valuing the farm? This camera, you guys should always tell me. Always tell me when you're not seeing figures. When you're not able to see figures, always tell me. Great, now I can see them. Now I can see them, all of them. Should we use these cash flows here? Should we use these cash flows? We discount. Thank you very much. But there is something that so many students here forget. and they end up in this case here getting a technical knockout. So many students forget one thing. Ikiwa for example ni madamu wangu nataka kuoa na mimi nataka sasa kumfanyia appraisal. Mimi nataka kumfanyia appraisal. Nione kwa mwezi atakuwa kwa mwezi, kwa mwaka 55, 86, 103. But you see, the money that will come to the organization, ladies and gentlemen, the money that will come to the organization, the family now, will not be the whole of this. Si mama lazima ataka afiche yake kidogo. Ama iko namna gani? Ama mama atakupatia yote? Mama atakupea yote kweli? Pesa yote ile amepata yote kweli? Wanaume wala mko hapa, mama atakupea pesa yake yote kweli? Lazima reserve, isn't it? Lazima reserve. So leo nikienda nyumbani nitaangalia kama kuna kitu mama ameficha chini ya mattress. Mbona mwenye amesema lazima ingine ficha chini ya mattress. Ladies and gentlemen, the same case with companies. These companies would want to retain something. Out of this, the company would always want to retain something. There must always be reserves. Sharon is saying that, you know what? We women are very, very bright. I agree 100%. That every time we must at least, hata ukituomba kitu nasema mzee na kuomba mimi kama mzako na kuomba 20,000, mama atakwambia sina 20 nako nayo. Lakini uzuri vile Winnie anasema, not Winnie but Sharon ndio anasema ni kwamba mama anaonanga mbali sana, lazima afiche kidogo ya ima. The same case with companies. Companies must always, ladies and gentlemen, hide something. They are called reserves. They are called reserves that you need to put aside for purposes of what here? Future growth. So in this case here, these reserves will always be given here. The reserves will always be given here. Sorry, I'm trying to share something that you guys, which I don't even have. So the reserves are given here. You can see in the question, there is a place where they gave us something that we never used. Cash to replace what here? Assets and finance growth. Are you able to see that cash to replace assets? Are you able to see that cash to replace assets? Somebody? Great. So in this case here, we have a reserve. So we have a reserve. A reserve here is cash to replace assets. Andika hapo in full. Cash to replace assets. Andika in full. This cash to replace assets. Please write this in full. According to Madam Jackie, anasema ni 20, 30, and 35. 20, 30, and then we have 35. So come and subtract like that. Come and subtract like that. Come and subtract like that for you to give us something very important. So the first one I'm being told is not 20, but 25. 25. 25. The first one is adjust the board. Thank you very much, Susan. That I will do. 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 And this is how I will do it. Lakini sasa imekuwa ndogo sana. Sijui kama wataweza kuona. Imekuwa ndogo sana, but please just write like that. And then I'll be able to make good. I'll be able to make good. Thank you, and thank you so much. So when I subtract the reserve, then I should be able to get what we call free cash flows. Free Nelson Mandela, I'm free. Free cash flows now is what I'll be able to get as a husbandee. Because that's just an example that I give you. You don't expect a serious husband like myself to get money from my madam. No. I strongly believe in what the Islam tell us. Islam inatuambianga principles zingine mzuri sana. Islam wanasema ya mama ni ya mama. Ya mama ni ya mama. Jabiri will tell you. Ya mama ni ya mama. Halafu ya mzee ni ya wote. Ya mzee ni ya wote. Jabiri, ukweli ama uongo? So free cash flows. Free cash flows. Free cash flows. Kweli kabisa ya mama akitaka kusuka nywele ni yake. Kenda kupigana na yeye makosa sana. So nimepatiwa hapa na Gilbert 30, 56, 68. So tuko na 30, 56, 68. So free cash flows are the cash flows that now will go to the investors. These are the cash flows that will go to the investors. Now we should be able to go to the next stage. If I'm the one doing, I'll come and double underline. And then I'll come straight away and write for my examiner. I write for my examiner capital letters discounting. I write for my examiner capital letters discounting. I can see Alice Makao. Ameweka mkono juu. Alice Makao, can I unmute Alice Makao? Alice Makao, thank you very much for putting up your hand. I really love students who engage mwalimu. There is some time back here, someone told me that mwalimu, you know what? I'll not want to. I'm left a bit behind. Alice Makao umebaki wapi? Hebu nifanyeni favor. Hebu piga picha answer yako tafadhali, piga picha answer yako tafadhali, tuma kwa Alice Makao. Alice Makao je amebaki wapi? I wish you mention Alice Makao amebaki wapi? Ndio nijue mali narudi nyuma. From reserve. From reserve. You see the reserve here, out of 55 that they've generated, 25 have to be put aside to be able to finance future growth. 25 must be put aside. So this 25, which is cash to replace assets. I told you to write this in full. This is cash to replace assets. We have been given the question. If Alice Makao, you look at the question very well, Alice Makao, if you look at this very well, you'll be able to see a place where they've told us cash to replace assets. Unajua very well kwamba if you give the owners of the company, if you give the new owners of the company all these cash flows, these guys will not be able to give you, money in the future to buy your assets as a subsidiary. So what do you do before you give the money to them? Before you free some cash flows to them, please come and deduct any reserves, any cash flows for purposes of growing our assets in future. So I don't know whether we are now together. Alice Makao, are we together now? Alice Makao, are we together now? I don't know whether we are together. Alice, please ask questions again. On the bus. On the bus. So I don't know whether this bus is Kireto Murungi's bus or it's the bus going to Kazineb. But Kireto Murungi's bus would have been bus. Great. So those students, thank you so much. Thank you so much. My net has issues, so I don't get how you began. So Alice, what I would recommend, we have a video of this. We are recording, you can see we're recording. Please work with the video because really I can't start from the beginning. Alice, please allow mwalimu to move forward, Alice. And if you allow that, please ensure that you drop your hand. I don't want you to get so tired. On Zoom, you drop your hand. The place where you drop your hand. Right? There's a place where you drop your hand. Alice ameshinda ku drop a hand. Thank you so much, ameweza. Thank you so much. So discounting, mi napenda kusimamisha discounting namna hii. Discounting, mi napenda kusimamisha discounting namna hii. Tuko na 1, 2, 3. Year number 1, tuko na 30. Year number 2, 56. Year number 3, tuko na 68. Alafu tuko na infinity. Wamesema something to do with infinity. Wamesema something to do with infinity. Wamesema something to do with infinity. Kuna maana wamesema something to do with infinity. Aki kuna maana wamesema. Nami naota. Kuna maana wamesema from year 4 onwards. It's expected that the annual cash flows from Tiny Limited will increase by 4% each year. Up to perpetuity. Up to infinity. So wamesema hapa kwamba growth rate is 5%. So I would want to give you 1 minute, and then we get to see whether there is anybody who will be able to give us the infinity cash flow. Let's see 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 whether there is anybody who will be able to give us this infinity cash flow. Abracadabra, mi napenda sana infinity cash flow, because whenever they mention infinity cash flow, I'm able to remember the provincial officer. I'm able to remember the provincial officer. Who equals who? Provincial officer 5 ama 4. Moja kidogo. 5 ama 4. It's here 4 onwards. O ikifika ushapata na 3. Wewe sema tu hapa infinity. Sema tu hapo infinity. Growth rate is 5%. Growth rate is 5%. Growth rate is 5%. So you know it's 4 to infinity here. 4 to infinity. Thank you very much for asking questions. It's 4 to infinity, which I prefer just calling infinity. Or growth rate I'm being told is not 5. Growth rate I'm being reminded it's 4%. Growth rate is 4%. Thank you so much. Sasa hapo unajua PO abracadabra equals DO into 1 plus G all over WACC minus G all over WACC minus G all over WACC minus G. Why are you working with WACC this time round? I would have worked with Kenya minus equity. I would have worked with cost of equity if the firm was 100% financed with equity. But this is not an all equity financed firm. In this question, they told us some time back there that they've got debt 35%, equity. So it's a firm that is financed with debt and equity. And if you put together debt and equity, you form what we call WACC. You form what we call WACC. Utazoea tukiendelea mbele, utazoea tukiendelea. For firm valuation, if I were you, I would have written this concept here in my mother tongue, especially if my mother tongue is that language which people from 𝗥𝗖𝗠 use. People from 𝗥𝗖𝗠. Unajua sasa shida nyinyi amtembei Kenya. Mimi natembea Kenya nikiwa free. For example, I know Isiolo Airport, one of the best airports that we have in the country. It's an international airport right now. If I go this way, I know all the way up to Busia, Malaba, Akula Ndanganya, right? Meru hakuna mahali sijui. Nilikuwa najua paka sometime back hotel ilikuwa inaitwa Chuka. Mulimalize hotel, ilikuwa hotel mzuri sana, Mkaua. Uko mimi najua sana. Whenever I'm free, I like traveling. I like traveling quite a lot. I like traveling and I love Kenya. Don't tell me to go outside there. I love Kenya. Great. So in this case, ladies and gentlemen, what is our DO? Our DO is the most recent cash flow. Our DO is the most recent cash flow, which is what here, 68 into 1 plus growth rate. Growth rate is this 0.04. 0.04 all over WACC. Unfortunately for the new students, WACC, we had obtained WACC in our last class. We had obtained WACC in our last class. According to Lucy ananiambia WACC is 0.11. Is that correct really? Is there somebody who can remind us, who can see what our WACC was? Great. WK is also confirming 11%. WACC, thank you very much, Susan Mwende. Susan Mwende from Kitui County. Very good county in Kenya. Very good county in Kenya. Minus growth rate. Growth rate again, which is 0.04. 0.04. So hapa ni abracadabra, pata numerator kando. Is there somebody who can give me the numerator kando? Numerator kando, numerator kando, numerator kando. Is there somebody who can give me the numerator kando kwanza? Kupata numerator ya juu peke yake kwanza. Ya juu peke yake kwanza. Inakuja ngapi ya juu peke yake? Woye. Ya juu peke yake inakuja ngapi? 68. Inakuja 70.72. 70.72 divided by the denominator. Divided by the denominator. Denominator woye inakuja ngapi? Denominator woye inakuja 0.07. Thank you so much. So then could you kindly now give me the quotient? And this quotient is our infinity cash flow here. This our quotient is our infinity cash flow that I'll put here. Is our infinity cash flow that I'll put here according to Lucy 10.29. This reminds me some time back nilienda town inaitwa Nyahururu. Nyahururu iko baridi mingi sana. Nikafanya makosa, nikaenda Thompson's Falls, nikashuka chini kabisa. Kushuka ilikuwa raha sana. Kupanda T Falls. International disaster. International disaster 10.29. 10.29. 10.29. Is there anybody who has ever been to Thompson's Falls? I think I need to start this club where people travel around, where people move around. Lakini pia ubao wanafunzi wa CPA wengi. Unfortunately, wanafunzi wa CPA wengi. Yes, I'll share. Wanafunzi wengi wa CPA wengi, they are not very exposed. Hata ukiwaita lunch for free, hawakujangi, imagine. Like last time I called them for lunch, pale Pelican Kiambu Road. Wanafunzi out of 200, walikuja wanafunzi wangapi? Hata wakufika 20. Wakufika 20. Thank you so much. I'll be able to answer that question, Lucy. But most of you, are you from Nairobi? Most of you here in this class, are you from Nairobi ama mkutoka huko nje? Yes, most of them are economists. Are you from Nairobi? Naivasha is quite close. Yes. Diaspora. Huko lazima ni mbali. Ukisikia tunasema diaspora, huko lazima ni mbali. From MKN, hiyo ni gani zesikie? MKN inaweza kuwa ni gani? MKN inaweza kuwa ni gani? Hiyo samogoli sijui. Makueni. The great Makueni. Great. Nandi County, Nairobi. Great. We shall organize. I'm not a mean person. Now, I would want to answer a few questions. And I know why they are asking, wow, Kajiado, where I come from. I know why these students, why they are asking these questions. It's because most of them were not there when we began tackling this question. Hii question, kuna mahali umeambiwa kwa hiyo question, kwamba the firm is financed through equity and what year? Debt. 35% debt. Angalieni hapa. Ikiwa, for example, a firm that is fully financed by equity, what tunasema PO equals DO, into 1 plus G, all over KE minus G. But you see, I can only use KE here if the firm is financed by equity 100%. Sorry, let me just change my batteries. If the firm is financed by equity 100%, 100%, 100%. But ladies and gentlemen, now if you look at the question that we have both debt and who? Both debt and equity. So you have both debt and equity, then ngoja kidogo. When you have both debt and equity, then you must use what we call WACC. You must use what we call WACC. You must use what we call WACC, like that. If I were you, I would have written that in my mother tongue. Can I speak some little Kimasai? Ujue mimi ni mkali sana kwa hizi mother tongues? Frank, Hii kitu imetokana bwana. Msaidia haraka haraka ndio nimalize class. Okay, sawa. Okay. Great. Great. So, ladies and gentlemen, here we are. Here we are. In red, I've put it down. In red, thank you so much. Thank you so much. Sasa ni kujeni hapa tukimalizia darasa jameni. Nataka hapa mnipatie PVIF. So PVIF, which percentage should I use? Should I use KE here or WACC? Which one should I use? Should I use WACC or KE? Which one should I use? Thank you so much. The one that you use down in the formula is the one that you use, WACC. So you shall use 11%. We shall use 11%. Now, let me ask you a question. When you get your discounting tables, do we have 11% there? Ama hakuna? When you go to your discounting tables, do we have 11%? Ama gotire? 11% iko ama hakuna? Iko. Thank you very much. Kama iko, hakuna kwanza kujifanya superstar at 1 plus R raised to. Hakuna kutumia formula. Camera not clear. Camera not clear. Hakuna kujifanya superstar. Hakuna kujifanya superstar at kwamba this is not clear. Hakuna kujifanya superstar at this is not. No. So hakuna kujifanya superstar. So long as it's 11%, so long as 11% is found in the table, yours is basically to read from your tables. Read from your tables. So year one, 11% year one. What are you able to see, ladies and gentlemen? 11% year one. What are we able to see here? What are we able to see here? 11% year one. 0.9009. 0.9009. Thank you very much. How about 11% year two? 11% year two. Thank you very much. Jackie found it. 11% year two. 0.81. 0.81. 0.81. 16. Thank you so much. Thank you so much. And then we have year three, 11%. Year three, 11%. What do we have there? 7312. 7312. And then we have this one. Very many students will not be able to remember this one. The last one, not many can remember. So the last one, they're telling me the drop-down menu. Drop-down menu. So this is supposed to be 7312, like that. And then you come and give us what we call the discounted cash flows. So now come and give us the discounted cash flows. Discounted cash flows. Please always try to put your cameras off, always. Always put your cameras off. Whenever you see students complaining that that and that is not clear, it's because our cameras are on and they're eating onto our bandwidth. It's only me we should have a camera on. It's only me we should have a camera on. Why? Because I'm the only handsome man around. All right. No, I'm joking. So wanasema mwalimu, the first one is 27 point what here somebody. The first one, please give me these figures. The first one is supposed to be 27. I don't know why they're not giving me figures. This and this. We are too late. 27.03. Thank you so much. And then now we have this and this giving us what figure? 45 point something, isn't it? 45.45. Thank you so much. Thank you so much. Then you have got 68 by this, 68 by this, 49.72, 49.72. And then now we have the last one, which is this by this. The last one, 738.72. 738.72. So when you add the full, you should be able to get value of the firm. Value of the firm. Should be able to get value of the firm. I don't know where they're getting 860 from. I can see so many students who are talking of 860. I don't know where they're able to get that 860 from. Oh, so the last one seemingly is 860, eh? But you see 73. Or the final answer, 860. The final answer is 860. The final answer is 8, value of the firm. Thank you so much. The final answer is 860 point something. 860 point something. Thank you and thank you. 860.92. So that is the end of this thing, but